Hello everybody, this is Miss Carol. Good morning, I hope everybody's okay. Hope everybody's going to be able to get a chance to watch this. This is MOD 110. We are still in week 3. Today is day 3. So our week is going to end on Friday. Tomorrow will be Thursday, will be our term test. Thursday, term test, and then Friday will be our theory test. So I will send that out to you probably tomorrow morning, first thing. I'm going to send out the term test. Go ahead and take it. If you cannot print the term test, what you need to do is write your answers on a piece of paper and then take a picture of that paper and send it to me via messenger or text. Okay? And same thing when we do the theory test. Okay? So today I'm going to talk about part 2 of chapter 4. Which is the general ledger. Last lecture we talked about the general journal. So today we want to make sure we understand the difference between a ledger and a journal. Okay? So we talked about the general journal, and I had you guys do some exercises, and to show you what the journal looks like, it's that. That's where we were doing all the transactions, the debits and the credits, remember? And we enter debits first, remember? Debits first and then credits. And then we make sure we put in the needed information. So today we're going to follow through and we're going to do some exercises where we're entering information in the journal and then transferring that to the ledger. So we'll do that in a minute. Okay. So make sure you have one of these blanks in front of you because I want you to follow through these exercises. I gave these to you before we left. And then you should also have the ledger. It looks like this. It has, I think, about 5 little spaces on the sheet. You need to have that in front of you. And we'll go over the difference. If you look at the general journal, the general journal just has lines for the date, for your description, and then it has one column for debits and one for credits. Debits on the left, credits on the right, just like with our T accounts. That's a general journal. One side, one column for debits, one column set for credits. And it again, all the lines run together and it's just one area for description, one area for date, one area for debits, and one area for credits. That's the general journal. So let's look at the ledger. Everybody say ledger. I don't hear you. Anyway, ledger looks different. The general ledger, these are cut off. So a general ledger will be a whole sheet. It's just that we cut them off so that you have room to post quite a few of them. Because for every transaction is going to be posted to an individual ledger. And I'll explain what that means. So for this one, the ledger has a place for the date, a place for the description or the account name, such as cash, accounts receivable, owner's equity, so on and so forth. A posting reference, which I'm going to explain what we do with that. Now, this is the big difference. It has 2 places for debits and credits. It has one place for the debit and credit that we're entering on this first transaction we're entering at this point. And then it has a balance debit and credit where we're going to be keeping a running balance. And remember a term that we called the normal balance. The normal balance is the balance that's always placed on the side of the T account that is increasing. Okay? So, remember, for an asset, it increases on the debit side. So, on the debit, like if this was cash, we would be running the balance on the debit side. If it's a liability, such as accounts payable, then it increases on the credit side. And so we would running our normal balance on the credit side. Okay? If it's owner's equity revenue, remember that's money coming in, money that you've made, then it increases on the credit side. And so we run our normal balance on the credit side. And then if it's owner's equity expense or drawing, remember that's reducing owner's equity, that increases on the debit side. So a good idea for you is to get a card, because again, a normal balance sheet or a normal journal doesn't have the little words plus and minus for credit or debit. It doesn't tell you what accounts get debited and credited, which one gets increased. So get a card and just write it on the card so you have that in front of you so that you'll always know. Okay? In fact, if you have a piece of paper right now, let's do this real quick. Pull this up. Okay. Get my handy dandy stool. All right. So remember the accounting equations. Assets equals liability plus owner's equity. All right. So what that means is we have two sides of the equation. So remember what an asset is. Assets are things such as cash, accounts receivable, equipment, supplies. Okay? So for an asset, let's do this a little bit higher. An asset, we increase on the debit and decrease on the credit. Okay? So again, make a card. Piece of paper or card that you're going to have in front of you while you're doing these transactions so you can quickly see. Eventually you'll memorize this. But until then, let's work with the card. Because again, your ledgers and your journals aren't going to say it increases on the debit or decreases on the credit. It's not going to say that. All right, liability. Okay, liability. What is a liability? We have accounts payable. This is money that we have to pay for things such as our rent, such as our utility bills and whatnot. The things that we owe. Actually, not pay what we're paying, but things that we're going to owe. Like we buy something on account. Like I bought a building and now I have to pay a mortgage. That mortgage is going to be an expense. It's going to be something I owe, an amount I owe. So accounts payable. And so on liability, we increase on the credit side and decrease on the debit. Okay. Now we have owner's equity. Okay, so we have owner's equity, we have revenue, and then we have capital. Revenue and capital. Okay? And that's things such as, again, revenue, capital. And on that one, it's the same as liability. It's decrease on the debit, increase on the credit. All right, one more. We have owner's equity, and we have expenses and drawing. Okay? So on this one, we do the opposite of this. We increase on the debit and decrease on the credit. Okay. So expenses and drawing. All right. So make sure you make a card that has that. And you guys should be familiar with these accounts already. We've been doing this for 2 weeks now, so you should be aware what an asset is, what a liability, what owner's equity, and what an expense owner's equity is. Okay? But as you do these, you're going to start memorizing, okay, credit, I'm going to debit it. If I want to increase my cash, I'm going to debit it. I'm going to increase my liability, I'm going to credit it. Let's say somebody makes a payment, or you make a payment towards your accounts payable, then you're going to debit it because you're going to decrease that accounts payable. You make a payment on your balance, it's going to decrease your balance. So you have to spend money on something, you're going to decrease your cash, you're going to credit it. Okay, so remember the T accounts. We spend a lot of time on those T accounts. So you guys remember those. T accounts are not going away, by the way. We're still using them. We're going to use them to kind of as a trial balance proof. All right. The next thing I want you to make sure you have is your book, your Kindle. Make sure you have this, because this is without being in the classroom, without the access to me as much as you normally have, this is going to be your lifeblood. So again, remember I said this is a well-written book. It's easy to follow. Just make sure that in the book it goes along and does these exercises. Make sure you're going along and doing these exercises with them. That way, when it gets back time to do the back, the exercises in the back, you'll already be familiar with it. Okay? So you should already be familiar with T accounts. The journal is pretty straightforward, guys. Remember how we do the journal. So we're going to get started with the PowerPoint. If you need to pause this video to write this down, you can. So I want to go ahead and get started while you're doing that. So pause the video and write these down if you have to, but I'm going to keep moving on. Okay? Today what we're going to do is we're going to talk about transferring from the ledger, from the journal to the ledger. That is called posting. We're posting from the general journal to the general ledger. Posting. All right, so let's talk about this. So this says week 3, day 1. This should actually be day 3. Sorry about that. This is chapter 4, part 2. Okay. So, first thing I want to talk about is a compound entry. We talked a little bit about this the other day, but I want to talk some more about this. So, this is a transaction that requires more than one entry. Remember, a compound entry is where there's more than one debit or more than one credit. Okay? Now remember, total debits need to equal total credits when you're posting on our debits and our credits. So in this case, the business transaction was the firm purchased equipment for $5,000, issued a check for $2,500 and agreed to pay the balance. Okay? So there's 3 things that happened. They purchased the equipment. So we're going to gain equipment. So what happens to that equipment account? It gets debited. So we're going to debit the equipment account for $500, or $5,000, sorry. $5,000. All right? Then, because we paid cash on our equipment, we're going to debit or credit the cash $2,500, and then the accounts payable goes in $2,500. So notice how the equipment costs $5,000. The total credits equal $2,500. $2,500 equals $5,000. So really what we're doing is we bought half the equipment with cash, half the equipment with accounts payable on account. Okay. And notice here again, this is the journal. The journal. We entered the equipment first because that's the account that's debited. Always the debit account first. And then the accounts payable gets credited. Stop there for a minute. The cash gets credited because our cash is decreasing, and our accounts payable gets increased, so we credit it. So remember, the cash is decreasing, so we debit it. But in order to increase accounts payable, we have to credit it. That's why they're both on the credit. In order to decrease cash, we credit. In order to increase accounts payable, we credit. Okay, so remember your card that you filled out. In order to decrease asset, we credit. In order to increase liability, accounts payable, we credit. That's why there's two under credit. Okay? By debiting it, $5,000, we decreased our cash by crediting it, $2,500. And then we increased our accounts payable by crediting it. Okay? That's why I just want to make sure you understand what we did there. That's called a compound entry. Oh, here it is. It's coming. This is your ledger, remember? This is your journal. Remember. Journal, ledger. They look different. All right, so remember, if it's highlighted in blue, you need to highlight it. And I will be sending this PowerPoint out to you through your email. So you should be receiving it. If you have to highlight it electronically, just highlight the text and put it in blue. Okay, or purple, green, whatever color you want at this point. Okay? So, first one I want you to highlight. The ledger contains a separate form for each account. So each account will have a separate form. We'll have one for cash, we'll have one for accounts receivable, accounts payable, for expenses, so on and so forth. For equipment, for supplies, accounts receivable, each account. That's why you need a lot of these. Okay? All right, the third step in the accounting cycle is posting to the ledger. So remember, the first step is to do our T accounts. The second step is to post to the journal. And then the third step is to post to the ledger. All right? Remember that the journal is called the record of original entry, which means this gets done for. The T accounts don't really matter because those are done on scrap paper. Those aren't official. Those are more like a way of just working it out, making sure your balance is correct. These are official. This is official. So this is the journal, which is the record of original entry. Okay, that's one of your questions, I believe. One of your 10 questions. The ledger is the record of your final entry, meaning this is the final step in recording a transaction, is your ledger. It's kind of weird because it's opposite when we do medical billing. Those of you who've ever done medical billing will see, well, wait a minute, we post to the patient's account first, then it goes to the journal. Well, it's just different. It's just different. I don't know why, it is. So in accounting, journal goes first, and then ledger. All right. So the process of transferring data from the journal to the ledger is known as posting. Make sure you highlight that. The process of transferring data from the journal to the ledger is known as posting. All right, again, what is posting? Posting is the process of transferring data from a journal to a ledger. Obviously, that's important to know. Okay? The process of transferring data from the journal to the ledger. Remember, the journal first, then the ledger. All right. So remember the accounting cycle? We talked about this earlier. Step 1, where we're doing our T accounts, analyze and classify the transactions. Those are the T accounts we spent so much time on. Step 2, journalize. Journal. Step 3, post the transaction to the ledger. Here we are in step 3. Okay? And then step 4, which we'll do next week, that's where we're going to prepare a worksheet and do the reports, financial statements, and so on and so forth. Okay? All right. The ledger forms. The ledger forms. On the ledger account shown below, notice the account name. So the account name is written on top here. It's written on top here. Because everything recorded in this ledger form is for cash, or whatever account that this is. Okay? So they wrote cash. I know there's a lot of things circled and everything. It's a little hard to see it. I'm going to point to it. Account name is right here, cash. And then it's given an account number. And I think in the book it talks about numbering your accounts. And when we're done with this PowerPoint, I'll show you. I'll tell you the page that's under. Cash is usually 101. Cash is usually first. Assets first. And cash is usually first. Remember, cash is usually our most active account. Cash comes in, cash goes out. Comes in, goes out. All right. The columns for the account number and the name, the columns for date, description, and posting reference. So that's this. The date, description, reference. The reference is, it says J1. That's referring to journal sheet 1. So whatever on your journal sheet 1 will have J1. If it goes on to the second page, then you'll put J2, J3, so on and so forth. Okay? That goes here for the posting reference. The reason why it's a part of the audit trail. If somebody's looking at a ledger and they need to see where it's posted in the journal, oh, J1. Okay, I'm going to the first page. Okay? So posting reference is the journal page. So J1, J2, whatever page it is. And then here are our debits and credits. So this is cash. Cash. So we're increasing the cash in this case. So we're going to put $100,000 under debit. Because we're increasing, in this case, we're increasing the cash for $100,000. So we're putting it under debit. And then nothing goes into credit. You don't need to put a 0 or anything else. Just leave credit alone. If you put a 0, sometimes it can be mistaken as a number. So just leave it alone. And then over here, under balance. Remember, the normal balance for an asset is under debit, because that's where it increases. So this is where I'm going to put the balance. So if I start with 0 and I add $100,000, my balance is going to be $100,000. So that's my balance. Okay? So let's just say that I took $50,000 and bought something. On this the journal, I would write it on the journal, of course, but when I posted it to the ledger, I would have the date, and then I would have the reference to the journal, and then here, instead of debiting it, I would credit it, $150,000, and then here I would put the balance. If I have $100,000 and I take away $50,000, I'm going to have $50,000 as my balance. So that's what I would put here. Okay? So we're going to keep a running balance of the cash. That way we always know where our cash is, where our assets are, where we are. Okay. So everybody understands that. All right, section 2, the general ledger. We're going to post journal entries to the general ledger accounts. Okay, so there's a 5-step for posting. On the ledger form, enter the date of the transaction. Again, your ledger form. Remember what the ledger form is, it's this one. You're going to enter the date of the transaction. And then enter a description of the entry. And then, if necessary, description of the entry if necessary, sorry. Usually, routine entries do not require a description. Highlight that. Right here, highlight this. Usually, routine entries do not require descriptions. Okay? On the ledger form, enter the general journal page, just like I mentioned earlier. So, over here under posting reference, I would put the journal page that I'm getting this information for this transaction from. J1, J2, whatever page it is. And then on the ledger form, enter the debit amount in the debit column or the credit amount in the credit column. Right here. The debit or the credit. Again, if we're increasing cash, we're going to debit it. If we're decreasing cash, we're going to credit it. All right? And then on the ledger form, compute the balance. So like we just did, if I had $100,000 and I paid out $50,000, I'm going to take $50,000 from 100 and compute the balance, and that's where I'm going to write it on the balance. So under cash, remember the normal balance is under debit. So I would write $50,000 under debit. That's for an asset account. Cash is an asset. All right. On the ledger form, compute the balance, enter in the debit column or the credit column, whichever one applies. On the general journal, enter the ledger account number in the posting reference column. So now, under the general journal that you just posted from, posting reference right there, you have a posting reference here. You're going to put the account number on the general, enter the ledger account number. So cash was 101, I would put 101 right here under that entry that I took it from. Okay? All right, let's move on. So remember, guys, you could also stop, rewind, and watch this over again. Stop, rewind, watch it over again, if you have to. That's the cool thing about recorded lectures. You could stop it, watch it over again as many times as you need to. Okay, step 1. On the general form, enter the date of the transaction. Enter a description on the entry, and if necessary, usually a routine entry does not require descriptions. So in this case, from their journal, they got this information. November 7th, equipment, $5,000 debited. Cash, It was purchased with cash. On the general journal, you want to put, that's where your description goes. On the ledger, you don't need all that description. On the general journal. So notice they don't have a lot of information on the ledger. So they put cash, equipment they debited, cash they credited, because they have equipment and they paid out $5,000. So remember, debits have to equal credits. They purchased the equipment and they wrote the check number. So then on the ledger, they're going to put the date that it happened. So the date was November 7th, 2019. They're going to put the date, 2019. Now remember, on the ledger, you could just write the date out. Just write the whole date out. Don't do it like the journal, where you put the year, then the month, and then you just ran the numbers. Just put the date. It's less confusing that way, less chances of errors. So if it happened on that date, just put that date. Most companies like you to use numeric days, months. Just depends on how your company does it. You could put November 7th, 2019, put the year on top, just like you do here. 2019, November 7th. Or some may put 2019, 11/7. Okay? All right, next one. All right, step 2. On the ledger form, enter the general journal page. Just like we were doing, just like I was mentioning before. Whatever the journal page is, you would put it here, J1. This journal is the first page, I'm going to put J1. If it's the second page, J2, third page, J3, so on and so forth. You might have J99. You might have that many journal pages. Just depends on your company, how many transactions you do. Okay? All right, step 3. On the ledger form, enter the debit amount in the debit column or the credit amount in the credit column. So, remember what we did. We bought equipment, $5,000, right? So on this ledger, this is the equipment ledger now. On the equipment ledger, see how it says equipment right there? Different account number than cash. We wrote the date. We don't need a description. Remember, you don't need a description on the ledger because everything is in the journal. Right here, purchased equipment, check number 101, 1001. We put J1 to reference the journal. And then we debited because we're increasing our equipment. We have equipment that we didn't have yesterday. So, debit $5,000. Okay? Hope everybody's with me. Okay, step 4. On the ledger form, we're going to compute the balance. Calculate the balance. Now, if it had a zero balance before this, they didn't have any equipment, so $5,000 plus 0 is $5,000. And we write it on the side of the normal balance, which is the side of the account that increases. So we increase with a debit on all assets. Equipment is an asset. Remember that. Okay? So we're going to write the $5,000 here under debit. Okay? Moving on. Step 5. On the general journal, enter the ledger account number in the posting column. So now back to the journal. Back to the journal, there's a column that says posting reference. In that column, under the equipment that we just posted to, remember it's equipment, I'm writing the account number right here that I posted it to. That way, again, crossing audit trail. I can check from the ledger, I can see, I can reference the journal. From the journal, I can reference the ledger. Audit trail. moving on. General ledger accounts. In the general ledger accounts means these are the general ledger. These are accounts. The balance sheet accounts appear first and are followed by income statement accounts. So this is the order that you're going to put your accounts. Highlight that. The order. Highlight this whole thing. The balance sheet and blah, 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 right there. Highlight that. So in other words, the very first set of accounts you're going to be putting in your general ledger, which means your list of accounts, is going to be your assets. And cash is always put first under assets. So cash should be the very first account you see. That's why we named it 101. Okay? The order of accounts speeds the preparation of the trial balance and the financial statements. We're going to talk more about those next week. They sound scary, but don't worry. It's basically all this is leading up to those. Just like the T accounts led up to the journal led up to the ledger. And all this is going to lead up to these statements, these reports. So if you're the bookkeeper, accountant, or whatever, accounting clerk, accounting administrative assistant who does accounting, you will need to report to your manager these reports. They're not going to want to see this, the ledger. They want to see the reports, the numbers. What are the numbers? Give me the balance. Give me my total AR. That's what they want to see. So we'll talk about that next week. So don't worry about it now. I just want to let you know it's coming. All right. So moving on. Section 2, the general ledger. Learning objective is to correct errors made in the ledger, the journal, or the ledger. Okay. Now remember, in class, we're using pencils. But in real life, these are legal documents. So we should be using pen in real life. But we're using pencils because we're learning and we need to be able to erase and write real small. But in real life, we're going to be using pens, black ink. That's the legal form. So these are legal documents. Pencil doesn't fly in legal documents. Okay? So if we make an error then, in class we could just erase it. But in real life, we can't erase it. Remember, well, if I was talking to my billers or anybody else, legal documents, you can't blot out, white out, or erase. If you make an error, you're going to draw a single line through it. So we'll talk about it. But they need to be able to see what it is you're correcting. Just to make sure that everything is on the up and up and you're not hiding anything. Remember, these are books. These are legal documents. These are financial records. So if you look like you're whiting out or scratching out or erasing, it looks like you're changing something, but you're hiding what you're changing. So that's why we draw a single line or we indicate there's an error. So here we go. Making corrections. So journal and ledger errors. Sometimes errors are made when recording transactions in the journal. So remember what the journal is. This is the journal. That's the record of original entry. Journal. The method used to correct any errors depends on whether or not the journal entry has been posted to the ledger or not. If it's just in the journal and hasn't been posted to the ledger, it's different than if it had been in the journal and posted to the ledger. Okay? So correcting journal and ledger errors. If an error is discovered before the entry is posted to the ledger, then neatly cross out the incorrect item and write the correct data above it. Okay? So you would put a line through it and then you would write the correction above it if it's just in the journal and it hasn't been posted to the ledger yet. Okay? So I'm going to highlight that. Highlight that last, that'd be that very first paragraph there. If an error is discovered before the entry is posted, neatly cross out the incorrect item and write the correction data above it. So let's say you write 500 and you should have written 600. You would cross out the 500 and write the 600 above it. That's if it's just in the journal. Hasn't been posted to the ledger yet. To ensure honesty and provide a clear audit trail, erasures are not made. Highlight that. Highlight that whole thing. We don't erase in the journal. And again, that includes whiteout, blotting out, scratching it out. You know, how you take your pencil and make it, obliterate it. None of that. No whiteout. So again, we're using pen anyway, so we're not going to erase. All right, moving on. Error correction before posting. On September 1st, an automobile repair shop purchased some stock equipment for $18,000 in cash. By mistake, the journal entry debited the office equipment account rather than the shop equipment account. Okay? So they had two different accounts. They have office equipment and shop equipment. They're two different things, right? If I have a car, it's different than my computer. Okay. So they accidentally posted it to the office equipment and it should have been to the shop equipment. So what they did is they, again, this is before posting to the journal, to the ledger. They crossed it out a single line so that you can read what's below it. That's the more important thing. And then they wrote above it, shop equipment. You see that? So they crossed out office equipment and they wrote shop equipment. The account would neatly cross out, or the account would neatly cross out the office equipment and write shop equipment above it. The correct amount, shop equipment, would be posted to the ledger in the usual manner. So again, we would just go on, post it to the correct ledger in the usual manner. Again, this is if the account was not posted to the ledger yet, just in the journal. All right, moving on. An error correction after posting. So when they say after posting, they're referring to after posting to the ledger. So it's in the journal and it's also in the ledger. Okay? So, if the error is discovered after posting, a correcting error is journalized and posted. Excuse me. Do not erase or change the journal entry or the posting in the ledger accounts. Don't change anything, don't erase it, don't white out, don't blot it. Note that erasures are never permitted in the journal or the ledger. Again, highlight that line. Erasures are never permitted in the journal or the ledger. Again, I know we've been doing this in class, excuse me, but we are students and we're learning, and that's the process of learning. But for real, we don't use pencil and we don't erase. All right, moving on. We're almost done. All right, corrections after posting. On September 1st, an automobile repair shop debited office equipment rather than shop equipment for $18,000. So this is the same mistake. The debit was posted to the office equipment account in the general ledger. After correcting the journal entry, a correcting journal entry must be journalized and posted. So, we would go to the journal entry, was posted to the general ledger. The erroneous journal entry was posted to the general ledger. Okay, so here it is. It's posted to the wrong ledger. So the correcting journal entry debits shop equipment and credits office equipment. So here what they said, they made a, so we would correct it in the journal the way we did before. But in the ledger, or in the journal, right, to correct error made on September 1st. So, under shop equipment, which it should not have been, it should have been, wait, it should have been shop equipment, I'm sorry. So the correcting journal entry debits shop equipment and credits office equipment for $18,000. Oh, I see what we're doing. Okay, so back up. After posting, if this is what we do in the journal. We write shop equipment was debited. This is what we already did, right? And what we do now is then we need to credit it. So it takes it off. It cancels it out. So we debited it, now we need to credit it. And then write a note to correct error made on September 1st when purchase of shop equipment was recorded to office equipment. So we debited it, now we need to credit it. All right? On the general journal. And then we go ahead and post that, the entry transfer $18,000 out of the office equipment into the shop equipment. And then we go ahead and post it in the ledger to the shop equipment. So in other words, you're going to put this debit, which you already did, to the ledger. And then in the ledger, you're going to go ahead and do the credit, which should zero it out. And then go ahead and post it to the correct account. Okay? All right. That is it for this one. We have a term test we're going to do tomorrow and a theory test Friday. Tomorrow I will probably do I'll do a study guide. That's what I'll do. I'll do a study guide and I'll send it out to you guys. And again, obviously, the theory test is going to be open book. You know, I can't say, don't use your books, I'm going to be watching you. You know, it is what it is. So, it's going to be open book. So, use your books. I'm going to have some transactions that you do. There's going to be some journal entries, and you're going to need to transfer those journal entries to the ledgers. So, you'll have to do like this. You'll have some journal entries, and then post it to the ledger. Okay? If you have any questions, I'm going to be on the teleconference today at 10 o'clock, so you can ask me then. You could also email me. You guys all have my email. Please email me. I'm going to put it on the board. Email me through my official email so that the school gets record of it. That way, it's showing that there is class activity. That's important. So Biggs C at uei.edu. And again, my phone number, for those of you who should know by now, 626-862-7710. Call me, contact me. Okay guys, I'm going to be on a conference call today, teleconference today at 10 o'clock. This is the access number. I'm giving it to you directly, what they gave to me. So if there's an error, I don't know. Make sure you dial 1. When you dial in the number on your phone, dial 1 before the area code, because that might be some of the issues. You don't have to do the dash between the 374-404. You don't have to do that. Just the 374-404. And then the PIN, that's for me. You don't need that one. You just need those two. The dial-in number and the access number. The PIN just tells them that I'm the one who's in charge. I'm the host. So don't do that one. Okay? Make sure you write this down. Write down. If I get this out before 10. If not, I will do another one tomorrow at 10 o'clock. I'm going to try to do this daily if possible. If not possible, at least 2 to 3 times a week. Okay? So if you can't get on the conference call, email me so that I know so that I can make sure you get whatever information you need. Most importantly, this video, this lecture is good material. Make sure, please, 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 that everybody has gone on to SurveyMonkey. Please, that's post your attendance for the week. SurveyMonkey, answer one question. The question could be, what are my class hours? 8 a.m. to 12 p.m. Doesn't matter how you type it in. Just, what are my class hours? Question, class hours are 8 to 12, sorry. 8 to 12. So basically what I'm trying to get through to you is, we are still in class. Even though we're not sitting here, you are still in class. So from 8 o'clock to 12 o'clock, you're mine. You're basically supposed to be in class. So you should be either contacting me by phone, doing classwork, posting on SurveyMonkey, doing some class activity. Okay? Very important. So try to get on today to the conference. Make sure by the end of today that you have gone to SurveyMonkey and you have posted that question. And then start working on the 10 questions that I sent to you and put those into SurveyMonkey. Here's a very important thing I forgot to tell you yesterday. If you do 2 questions today, question number 1, don't worry about what are my class hours. That doesn't count. For the grade, there are those 10 questions. So you start with number 1, start number 2. Let's say you log off and you submit the 2 questions. When you come back and answer number 3, go to the number 3 spot. Leave the other 2 blank. Because when they collect it, it's going to register as 1, 2, 3. Just, that's the way it is. It is what it is. So this was a online package that was created on the fly. Nobody predicted this. Nobody knew it was coming. We had a week to put this together, not even that. So it is what it is. We want to keep continuity. I don't want you guys to have to repeat this module. So if you want attendance for this week, go to SurveyMonkey and just post 1 question. What are my class hours? 8 to 12. If you do that, you'll have attendance for Monday through Friday. And once you do it, please text me to confirm that you've done it. All right. See you at 10.